Here comes another important relief, and that is said to be an incorporation relief. As the name suggests, that whensoever the business is gonna be incorporated, where the self-employed person who was previously conducting his unregistered business is gonna transfer his business into a company, that is basically the process where we can say that incorporation is going to take place. So if an unincorporated business is going to be transferred into a company, of course the assets related to unincorporated business are going to be transferred to this newly made company. And here, when all the chargeable assets are going to be transferred, by change in the ownership of chargeable asset would lead to what? Of course, the calculation of gain or loss. So once again, where all the business assets of the unincorporated trade are going to be transferred to the company which is being incorporated from unincorporated business, and the assets are going to be transferred, here is going to be an application of a relief which is called incorporation relief. As what we all know, that if a business is going to be transferred to a newly formed company on a going concern basis, there's going to be no significant gap in the conduct of exactly the same trade by the company which used to be run by an unincorporated business. Then whatsoever the chargeable assets are transferred, we need to compute gains on it, and the gain is gonna be deferred if certain conditions are applied, and so this kind of relief is called incorporation relief. Keep one thing in mind, that there are said to be certain conditions which need to be fulfilled, as in where the unincorporated business is going to be sold to a company, where the incorporation is going to take place, and considering all the assets are going to be transferred to the newly formed company except for cash, and the business which was used to be conducted by an incorporated business will keep on running by the newly formed company. The business will keep on conducting its trading activities on going concern basis. Then all the chargeable assets which are being transferred, all the non-current assets being transferred, we need to compute gain for them, and the gain is going to be deferred by the application of incorporation relief, provided the consideration that is being received from the result of incorporation shall be received in the form of shares. But where the consideration is not going to be received completely in the form of shares from the newly formed company, rather it is being received partly in the form of shares and partly in the form of cash, then the amount of gain that is being deferred is gonna be restricted. And how is it going to be restricted? We need to multiply the gain figure with the amount, with the consideration received in the form of shares, divided over total consideration which is being received, which is the combination of both cash as well as shares as a result of this incorporation activity. So this much of the gain is going to be rolled over against the cost of the shares received, and this is how the gain is going to be deferred. Now let's consider this whole thing with the help of an example. Let's consider the whole concept related to incorporation relief in detail. On 31st of January 2024, Sanvi sold her business to a limited company for an agreed value of £1,100,000. So you could see that she has transferred her unincorporated business into an incorporated one. So that's how an incorporation has taken place. And she set up the business in August 2012. All of the assets were transferred to the company with the exception of the cash. The assets which were transferred are as follows. It actually includes freehold premises, which was purchased in August 2012 for a cost of £240,000. When an incorporation took place, it had a market value of £700,000, which will be considered as its disposal proceed. Similarly, goodwill has also been transferred from her unincorporated business to a new limited company, and goodwill is a chargeable asset for which gain will surely be computed This goodwill does not carry a cost but has a market value of £250,000. And again, whatsoever the market value of chargeable asset existing at the point of incorporation, that shall be taken as its disposal proceed. And here they've also given us the market value of inventory and receivables, but we have nothing to do with these two things, as because both inventory and receivables are current assets. They are not the chargeable assets, for which no capital gains tax implications will have to apply. So overall, the value, the consideration that has been received from this newly formed company is of £1,100,000. And here we have got a requirement in order to compute the gain immediately chargeable and the base cost of the shares, assuming two things. If 100,000 £1 ordinary shares in the company is received as in the form of consideration, I mean, the whole consideration is going to be received only in the form of shares. And how many shares are being received? 100,000, whose face value is of £1. And if in case the mixed consideration is received as a result of incorporation, I mean, where 80,000 £1 ordinary shares are received and 220,000 pounds are received in the form of cash, then what gain is going to be chargeable on an immediate basis, I mean, in the current tax year? So I'll have to deal with these two requirements one by one. So first, I'm going to consider this sub requirement 1, where the whole consideration is being received in the form of shares. As what I've told you, that we just need to compute the gain related to the chargeable assets only. I mean, the chargeable assets which are being transferred from an unincorporated business to a newly formed company, only the gain related to such assets will have to be computed. So as freehold premises has got a market value of £700,000, that is taken to be its disposal proceeds, while the cost is of £240,000. So against disposal proceeds, I'm going to deduct the cost, and that's how we'll be able to come to know what the chargeable gain figure is. So the chargeable gain figure in this case will be of £460,000. And now there is another chargeable asset as well, which is being transferred from a newly formed company, and that is of goodwill, and it has got a market value of £250,000 while the cost is 0. So £250,000 shall be taken as its disposal proceed, where the cost is nil. So it generates a gain figure of £250,000, right? So all the chargeable assets are to be used for the sake of computing capital gains, and afterwards I'll apply incorporation relief considering the relevant conditions are met. So I just need to know that what the net gains figure is. So it is of 460,000 plus £250,000, so that is of £710,000. So that is like said to be a net gain figure, against which I have to apply an incorporation relief. We all know that incorporation relief is available where all the business assets of incorporated trade are transferred to a company, and that is going to be done on a going concern basis, which is the case very much obvious over here. And cash is not going to be transferred to a newly formed company, and this thing has been explicitly said. And considering the whole of the consideration is received in the form of shares, so the whole gain is going to be rolled over in the form of incorporation relief. So the whole amount of this gain of £710,000 is going to be rolled over under incorporation relief, and that would mean that current year gain, the immediately chargeable gain in the current tax year, is 0. So as the whole gain has been rolled over under incorporation relief, because the whole consideration has been received in the form of shares, now I need to know that what the base cost of shares is, because Sanvi does have shares in a newly formed company, she will definitely have to sell those shares somewhere in future. So she really needs to know what the cost related to these shares are. So considering according to this requirement, which is requirement A1, where 100,000 shares are being received in the company, here we know that the amount that has been received is of 1100,000 pound. I mean, this is the value that has been received as a result of incorporation. So this much is the cost associated with the acquisition of these 100,000 shares. But when an incorporation relief is claimed, we need to deduct the amount which is being rolled over in the form of incorporation relief, which is of 710,000 pound in this case. So now I need to see that what the base cost related to these shares is, as the value that has been received as a result of incorporation is of 1100,000 pound, against which we are going to deduct the figure for incorporation relief, which is of 710,000 pound. So that's how the cost for the shares, base cost for the shares, the cost which we have to use in future for the shares is going to be reduced, and that would become 390,000 pounds. Now I'm going to consider the same example with a different requirement, where it is asked that if mixed consideration is being received as a result of incorporation, 220,000 pounds are received in the form of cash, while 80,000 £1 ordinary shares are received as a result of incorporation, then what's going to be its impact on incorporation relief? Because we all know that where the proceeds are partly received in the form of shares and partly in the form of cash, this would have an impact on incorporation relief. The incorporation relief is associated with the consideration which is being received in the form of shares, and where the consideration is partly received in the form of shares, some of the gain is going to be rolled over in the form of incorporation relief. Partly the gain will be rolled over. And how would we be able to come to know that how much of the gain is going to be deferred? It's like going to be rolled over. That is going to be determined with the help of this formula, which is gain, overall gain related to the transfer of all chargeable assets into consideration received in the form of shares divided over consideration received in totality from a newly formed company. So, once again, I'm going to take a start from here, because already we have computed the gain related to the transfer of chargeable assets, which includes the premises as well as goodwill. The premises has scored a gain of 460,000 pound, while goodwill has got a gain of 250,000 pounds. So altogether the net gain figure as a result of incorporation is of 710,000 pounds. But then, as the consideration has not been completely received in the form of shares, I just need to see that how much consideration has been received in the form of shares. As here, the total consideration is of 1100,000 pounds, out of which it is stated in the question that 220,000 pound was received in the form of cash. So I'm going to take the difference, that if 1100,000 pound is the total consideration that we are going to receive, out of which 220,000 is the consideration received in the form of cash. So the remaining consideration of worth 880,000 pound will be associated with shares. And how many shares we have got? What is the number of the shares that we have got? It is of 80,000. So 80,000 shares are received having a value of 880,000 pound. So using this value, the value of the consideration received in the form of shares, we will be able to come to know that how much of the gain is going to be deferred, how much of the gain is going to be rolled over under incorporation relief. So £880,000 is the value of the consideration received in the form of shares, while £1,100,000 is the total value of consideration. So as the gain figure is of £710,000 into consideration received in the form of shares, which is of £880,000, divided over the consideration received in totality from a newly formed company, the incorporation relief figure is of 568,000. I mean, this is of £568,000. So that would mean that out of the gain of £710,000, £568,000 has been deferred, while the remaining gain of £142,000 shall become chargeable immediately in the current tax year. And now, do not forget to determine the base cost of the shares, as now we have got 80,000 shares whose value is of £880,000, but whatsoever the value of these shares is, that's going to be reduced because incorporation relief has been claimed. And how much of the incorporation relief has been claimed? This is of £568,000, right? So 880,000 being the overall market value related to the consideration that is got in the form of shares, deducting the incorporation relief, which is of £568,000. So the base cost will be of £312,000. So by base cost, I mean to say that this is the cost which is going to be taken for the shares which have been received as a result of incorporation, or in simpler words, whensoever Sanvi will be selling off these 80,000 shares in future, she will be using the cost of £312,000. Keep one thing in mind, that whensoever an unincorporated business is converted into a company, incorporation relief is automatically given. So the individual needs not to make a specific claim to HMRC in order to demand this incorporation relief. Rather, it is going to happen automatically. But there could be a chance that individual would not like to apply incorporation relief, because in cases where an unincorporated business is going to be converted into a newly formed company, we could simply say that this is just an end to an unincorporated business as well. So if you just look from this perspective, that when an individual is going to convert his unincorporated business into a new limited company, then that would simply means that his unincorporated business is going to get seized, where business asset disposal relief is also applicable. So sometimes individuals do not want to apply incorporation relief, rather they want to go for any other relief. So in such cases where individual would not want to claim incorporation relief, this has to be disapplied, and it should be done within 2 years after 31st January following the end of tax year. So that would mean that if an unincorporated business is going to be transferred to a newly formed company, though incorporation relief is automatic, but individual may claim to disapply this relief, and that should be done within 2 years after 31st January following the end of the tax year. So for instance, if we talk about the tax year 23-24, in which an incorporation has taken place, which simply means that an unincorporated business is seized. So there could be a chance an individual would want to disapply the relief. So he has to make a claim by 31st January 2027, which is basically appearing within 2 years after 31st January following the end of the tax year in which incorporation of the company has taken place.